Welcome to our YouTube podcast session where four seasoned traders come together to unravel the mysteries behind successful trading. In this episode, we explore the challenges traders face, the mindset and habits that are essential for becoming a successful Forex trader, uncover strategies for profitability, discipline needed to have an edge in trading, risk management, and we also discuss how traders can thrive irrespective of their choosing trading approach and staying focused on the long-term goals. Join us as we share insights, experiences, and tips to empower fellow traders on their journey to financial success. I'm Kelvin by name and owner of Trend Portal. With me here are
I am Coach Joe, founder of PIG Pips, and I have my colleague.
Hey guys, it's TSM Boss over here, and then I trade based off Malaysia SML. I am the founder of Order Flow Trading. You all are welcome to this podcast.
Hello guys, this is Trader Maximum here, and I am the CEO of Maximum Trading Institute. Stay tight as you receive value.
Trader Max, what do you feel is more important in trading? Do you think capital or discipline is more important in trading? What do you have to say about my question?
Well, from my many years of experience in this market, I can actually tell you that capital is not really what you really need as a trader, because when you don't have that very discipline, when you lack that trading discipline, trust me, no matter the amount of capital you are being given to, you will certainly mess things up, because you won't even know the proper and the right risk management ways to actually manage that's your capital with discipline. Do you understand? So discipline is actually the bedrock of profitability in the Forex industry. I think this should just be the answer to this question. All right. So
I have something to say, right? So irrespective of the fact that we actually have the necessity of being funded or having a huge capital, right? If you actually can't manage smaller accounts, if you actually can't believe in this repetition where you actually believe in your system and then do the same thing over and over again, right? You literally have yourself even playing with bigger capitals. That is to say, even if you're 10,000 in funded, or you have a proper account, or you have a big capital, you end up having the same problem over and over again, right? But whenever you have your discipline in place, it means, okay, if I know that this is wrong, then I'll have to avoid it at all costs, and then literally put myself way ahead. And discipline is actually what puts you ahead of 90%. And there is this question and there's this subject that we as traders are not literally looking into, right? And I think we definitely would have to talk about this right here. So in respect to how we all trade, right? You're a price action trader and he's a price action trader, right? I actually wanted to ask, do you actually think that your risk to reward as a trader have a direct impact on your psychology, right? Just as we have a lot of traders who believe in the power of having a crazy risk to reward, more like a 1:15, a 1:20. And you actually have other traders who believe that, okay, the lesser your risk to reward, the higher your win rate, right? And to a very big extent, both of them actually, let's say, clashes on its own, right? So I actually want to hear your opinion as a price action trader who have been in this game for a very long time. Do you think that your risk to reward on any single trade has a direct impact on your psychology?
all right. Thanks for that question. With my years of experience in this industry, I can say that your risk to reward actually plays a vital role on the long-term goal, because we have scalpers that actually trade off 1:1 risk to reward, and they're also profitable. The same way we have day traders that trade with 1:3 risk to reward, and they are profitable. And we have swing traders who majorly focus on 1:5, 1:6, or above. So it depends on what actually works for you as a trader. But on the long-term rule, we are talking about being profitable, and because you're treating this as a business and not just as a get-rich-quick scheme, you actually have to consider these factors. So I believe that having 1:2 risk to reward or 1:3 risk to reward, it saves you in the market, in the sense that maybe when you have a winning trade, you can actually take some losses and it won't affect your equity or your balance. But when you trade off 1:1 RR and you have one win, that means you have to at least win another trade in order to be able to safeguard that your equity. But when you are trading off 1:4 risk to reward, you can see that actually making a profit or letting your winners to run and closing off 1:4 risk to reward, you can see that you actually have 3 more risks to take on that particular account before you actually talk about maybe endangering your equity or putting your equity out there into the market. And there are also some traders trading off 1:5 risk to reward, and they are not profitable. You can testify to that because there are people who actually place trades, and instead of allowing that trade to actually move and hit their target, and they are trading off, let's say 1:5 risk to reward, you see them closing that trade because they are not actually letting that winners to run. But assuming it was your stop loss, they will let that stop loss to actually hit. And you see that they are taking a losing trade and not actually maximizing their winning setup. Because I go by a principle in trading. You let your winners to run and you cut your losses short. So when you're on a winning trade, you tend to at least make use of that opportunity because you don't actually know the trade that is going to be profitable or trade that is going to play out until you see them actually play out. All right. Do you have anything you feel like you can add on this topic?
He said most of it, And another thing, you need to be disciplined with any system you have chosen. So if your system is like an intraday and you have minimum, because this is where there's a problem, A lot of people think it's only the maximum. You need to also understand the minimum your strategy provides you, so that when you see the minimum, you're already looking to take partials. If not, if market tries to retrace around that area, you're already looking to leave the market completely. So it's all about discipline, having a nice system, and following up to the team. All right.
So, like, in respect to what you said, I think I literally have another question of this particular answer, right? Now, he said you should let your winners run, and at the same time, you should actually cut your losses, right? Now, every single trader have their own particular psychological tolerance, right? So let's say I can have this psychological tolerance of holding for a very long time, and then trader B can't actually like partake in that. So trader B needs to actually like close his profit immediately, not because he is a bad trader, but it's practically because of his kind of personality, right? And this is a particular game where we actually have a lot of personalities in this market, right? And we all can trade the same thing, but actually won't get the same result, right? So don't you actually think that this should all actually boil down to your psychology as a trader, where you actually have okay, if this works for you, then stick with it, right? And then go for just the A setups instead of just more like leaving your system to go for something which personally you can't achieve. So what do you think, bro?
So from what I understand, your question, right?
Yeah.
You are trying to talk about the psychology, the effect of having a bigger risk to reward, and not letting it run, right?
Yeah.
So it all goes back to discipline, guys. You need to like be sure that trading is what you want, and then you need to also be sure that your system works. So if you have a good system that works, there should be always a place for take profit. It doesn't matter if it's a 3 hour, at least it should be above 2 hours so that you can, like my partner say, you can recover your money, you can recover your risks. So make sure that if your RR is above 2, then you are good to go. It doesn't matter if it's 50, if it's 45, if it's 5, if it's 6. Just make sure it works day to day in the market and you are able to extract profit and keep profits. Very important. So I think I answered your question.
All right.
So right here, guys, we actually have an ICT trader with us, right? And if you actually know ICT, you actually understand SMC, right? You also will be talking about having a very crazy risk to reward and price, right? And every single trader right here have their own unique approach, right? Ranging from having a 1:3 risk to reward to having a 1:5, and then having over a 1:10, right? And each of us have our different beliefs in the market, right? So I actually will be giving this particular question and asking our ICT trader right here what he actually thinks about having a crazy risk to reward, if having a huge risk to reward actually affects or has this direct impact on your psychology as a trader. So what do you actually think about this, bro?
All right. From my own point of view, I feel like it all boils down to risk management. It all boils down to risk management. This is because it's not just about having a crazy risk to reward. You understand? You can have a crazy risk to reward. You can be seeing, let's say, 1:5 risk to reward trades on a daily basis, and you'll be executing. Probably when you end up having about 30 or 40% win rate, you end up not being profitable. But when you actually truly understand how to maximize the importance of risk management, trust me, with as little as 30% win rate, you can make crazy amounts of money from this market. What do I mean by this? Let's say you're actually a trader that can easily come up with, on intraday basis, you can come up with about 1:5 to 1:10 risk to reward ratio. And you have a $10,000 account you are trading. Now, on a single trade you execute, your risk in that particular trade will probably be around, let's say, 1% risk. That's what we've been advised to risk per trade. On a $10,000 account, 1% risk will actually be, I think, $100. And when you risk $100 on a trade, you are meant to expect how many dollar profit? You're meant to expect $500 profit. That is 1:5 risk to reward ratio. But when you don't actually risk that 1%, you randomly open any probably lot size you just feel comfortable with at that point in time. You might end up opening, let's say, 0.2 lot size on a $10,000 account in about 5 pips Excel trade. That's actually bullshit, because trust me, you are not maximizing the right profits that very trade should give you. So when you are actually following your risk management model judiciously, trust me, you will actually see a very huge change, a very dramatic change in your trading career. That is risking specifically a certain amount of risk on each of your trades judiciously, and not just probably just twisting around lot sizes on any random trades you see. So I think that is just my take there. So it is just not, it all just boils down to having a working risk management model. Thank you very much, guys.
All right, bro. So I literally get what you're trying to say right now. You're trying to say, okay, in respect to having a crazy risk to reward, you should actually have your risk management intact, right? And Coach Joe actually did say right here, it all boils down to psychology, right? So I think don't you actually think that psychology and then risk management is a whole different game altogether? Judging from the fact that, okay, I might actually have my psychology intact, and then my risk management game is like whack, right? And then I might actually have my risk management game intact, and then my psychology is like whack, right? And when we talk about psychology, you can also talk about the ability to like take losses and then be very calm that, okay, I did take this particular loss, right? And then also in respect to risk management, I can actually like take a loss, and then my psychology is like I'm down, and then I can literally like cope with that particular loss, right? So don't you think that it's a whole different game altogether? And then when we actually want to address psychology, we should address psychology as an independent field on its own, and then risk management as an independent field on its own.
First of all, the way I trade, I don't really believe so much in psychology. Why? Because if you are disciplined enough, you have been able to cancel out the effect of psychology in your trading. So what discipline is? Discipline is the ability to follow through what you said you would do, no matter the element that's like distracting what you already put down. So if you said you're going to risk $500, as my partner said, maybe you had a 10K account and you say you're going to risk $100 in one trade a day, and that trade comes and you risk exactly $100, you follow through with your plan. You are disciplined enough. There's no room for psychology. Even if it's a winning trade or a losing trade, first of all, you said you're going to trade $100 a day, and first of all, you tick that box because that's what you did. So what comes in after having a sound discipline? A working system. So with a working system, you are sure that your discipline will propel in a large amount, because you need time to play out on your account. You need time to compound this interest on your account and build it. Because there are so many times you have a winning trade, but because you are not disciplined enough and you have a vision of, let's say, taking 10,000 to 1 million and all this crazy stuff you see online, you will not close that trade. And this trade turns from a winning trade, which is one of the taboos of trading, to a losing trade. So we should try as much as possible to be disciplined when you embark in trading, when you are thinking about coming into this business. just be disciplined with your lifestyle first off. Then from there, it will easily transcend into your trading account and allowing you follow through with what you said you do in terms of risk management and in terms of strategy. So guys, I think I was able to hit the nail by its head, yeah.
All right, so like we did actually get an answer to that, right? And then from this particular answer, so we actually do get more questions coming up. And then the next question I actually want to ask is, as a trader who actually goes for the bare minimum, right? That is for 1:3, right? And then what can you say to like other traders out there? Let's say this is particularly Nigeria, and then we are all like in this particular country at the moment. We actually have a lot of traders who are actually struggling with raising capitals, right? Don't you actually think that if I'm struggling with having a capital, I need to like increase my risk to reward in order for me to like maximize on every single profit I make in the market? So it means if I actually have an account of 10 USD, for example, if it's practically what I can literally afford to fund in my trading account, and I have um a trading setup, right, which I'm able to like risk $1, and then my let's say my overall target is giving me a 1:10. That is to say, I'm risking $1 to make actually $10, right? Don't you actually think it's particularly useful as a trader who finds it like difficult to like raise up capital to actually go for this crazy risk reward and actually maximize their wins in this particular scenario? I think I'm going to like forward these questions to Kevin Legacy in respect to this, because he actually talked about having this kind of risk reward. You get me right? So let's see.
All right. In respect to your question, to beginner traders or those that are still struggling to find capital to trade, I wouldn't advise you maybe starting with a $10 capital, because just like every other business, you actually need capital in order to survive in the market. You actually need capital in order to at least have an edge in your risk management game, because with $10, you can't be able to maintain a 1% risk on a $10 account. So maybe you have $10 account, you can try out a different approach to the market, in the sense that if this $10 you have and you convert to Naira as a Nigerian, you will see that you actually have more capital to trade or play with. So you can try flipping the account, which is not really advisable, but this is maybe a criteria whereby you can actually make more from the market by flipping your account. And with that $10 now, converting to Naira, you have, let's say, 15,000, and you can actually risk 5,000 per trade or 6,000, and you actually have another trade to take. So whereby you are risking this 5,000 or 6,000 Naira, you can try flipping that amount to some certain amount. Let's say you're risking you have 1:3 RR or 1:4, and you're risking 5,000 or 6,000. You can see that once you hit your target, which is 4% risk, 4% reward, sorry, you actually were able to make 20,000 Naira. And you see that having that 20,000 with the other capital you have, you can split it into some parts. Let's say you're splitting it into four equal parts. Then you are now risking part of the money on each trade you're taking, and you're also trying to actually replicate the same thing you did before, which is risking that entire amount, which is 5,000 or 6,000, to make some certain profits. And this will kind of help you in building the equity you try to trade on the long-term basis. Or you can try trading prop firms. There are prop firms accounts out there whereby you can actually buy and you can source for sponsors, people that have the capital, since you have the skill set to actually make this money. Because there are people out there who are actually looking for people or traders with this skill set to actually make some percentage return for them. So I feel like this is actually going to help you as a trader to maximize the profits, and at the same time, trying to make something out of the market with your little capital. I don't know, do you have anything you feel like you can add to this?
Yeah. As as regards to his question, I just want to ask, because in the setting we are right now, and I'm trying to be a trader in 2024, I'm trying to be a trader. I'm going to be thinking, okay, I have $100 and now I have two mentors to pick from. Do you understand? A flipping mentor and a proper mentor. I'm going to put it out to two of my traders. Here. First of all, if you don't know Gidi Chan, you should look him up on IG. He's a very crazy flip lord. So you should look him up, guys. For real. Look him up. He does it like it's nothing. It's easy for him, man. So if you have $100 in 2024, you're trying to like get into the forex industry. Let's say I'm looking for a mentor. Will you advise me to come looking for a flipping mentor, or I'll come looking for a profit mentor? Because it's 2024, right? We are all trying to make money. So what do you have to say, bro?
All right. In respect to like flipping, right? Now, I would say both ways are like literally profitable, right? Now, when it comes to flipping, right, I major in flipping with my setup, right? I believe that okay, if I literally don't have much capital, I can literally like capitalize on opportunities that present in the market. Why we see actually look at the fact that the market is a place of probabilities, right? And we actually would want to like capitalize more or maximize on our A setups, right? So when it comes to flipping, right, it's literally a crazy one, and it will require like a tough like psychological tolerance in order to like venture into that particular aspect. But when you actually like venture into it, you understand your personality. You can actually like do a lot of crazy things in the market, right? And in if I'm to get your question right, you said between a conservative mode, right, and let's say a mentor who is into flipping, right? And then someone who is into like the conservative mode via problems, right? Well, to me, I would say if you're practically trading with your let's say if you're a brokey, right? And then you're practically trading with your last cash, right? I wouldn't literally advise that you yeah, $100, right? If $100 is the only cash you can literally afford at that particular point, I won't literally advise you go into the like the flipping mode, right? But if you actually have let's say 200 USD, right? And then you can actually like decide to like split the 200 USD where you have a spare 100 USD, right? You can actually like decide to go on 50-50 and then give it a shot, right? Now the thing here is that you actually will capitalize on taking that 50 USD or the 100 USD to like 500 to 600 easily or at that particular point. And if it's to go right, then fine. You get me right? You don't actually want a scenario whereby you like get stocked up trying to like grow an account, right? You take the shots, and if you're actually sticking to your risks, if you're actually sticking to your setups, right? Sticking to the criterias and the A criteria, then you should actually like be able to achieve this like very, very fast, right? But if in a scenario whereby you actually don't have any spare capital, then I literally would advise that you should go for the flip trading aspect, right? Because it has a whole lot of mental toll on it will have a toll on your mental health if you don't like um understand what you're doing. Like if you did fucked up for life, like if you land for hospital due to high blood pressure, you get. But anyway, that is it. So
Well, my view in this very topic is actually this. I feel as an individual, we all respectively have our individual traits. You understand? We all have our risk tolerant level. You understand? To my own self, I can't actually tell you that I am really a big fan of flipping. I'm not really that type of a trader that believes in trying to just out of the blues, let's say take $10 to $10,000. No, that is not actually my type of trader. But I believe there are traders that are out there that are actually built for that. Trust me. But for me, I believe in conservative trading. Just slow and steady, conservatively. Over time, with the real skill set, you will definitely compound your account balance. And that is just the way it is meant to be. So I think this is just my take on this. But don't get me wrong, you can as well make lots of money, even if you are after probably something like a quick money. You need cash for some certain bills or something like that. You just want to risk it. Then good and fine. You can go all in a, let's say, $50 account or $20 account and risk everything. And trust me, you can probably make crazy amounts of money from the market, and it will be a win to you. So it is all just dependent on the type of trader you are. So I think this is just my view. And I actually have a question. I have a question I would love to direct to everyone here. What do you think is actually more important, most especially to the developing traders? What between having a good risk management and having a good psychology, which should you think they should focus more on? I mean, risk management and psychology. Which one do you think new fast traders that are still struggling to be profitable, which do you think they should focus on more? Which do you think is more important?
Next question. I love your question because it's something I really think a lot of traders should know. So, as regards psychology, I'm not really big on psychology because I believe a disciplined trader should be able, with a good risk management, should be able to be profitable without even coming across any psychological effects. Because again, it's all about being disciplined. You understand? Having the ability to do what is already on paper. So if on paper your mentor says, or your trading plan says, if price gets to minimum of 2 hours, I'm looking into break even on that trade. I'm looking to follow through with what I said. You should be disciplined enough to say, okay, yeah, the price is already moving in my favor. It's time to break even. You understand? And taking some profits, because most times the market don't really like push up the way is already pictured in our mind. You understand? The market don't really just push up from one angle. Most times you might come back to retest your entry and maybe even go south. So the many times that it will go south, you're already protected with break even. And because you are disciplined, you understand, you follow through with that. And your risk management becomes more important than the psychological part of what you just of trading, right? That's the question you ask. So for me, I don't really think psychology is the main thing. I think risk management backed up with discipline. A disciplined trader that is handed with a good risk management plan can produce consistent profits over like a psychologically built trader without discipline, and he's just aware that okay, yeah, I need to be successful and all that, but then there's no discipline to what he's saying. It's just all about up here and up here, and discipline for me plays a big part in trading, and it really helps. So from your question, I think it's safe to say I answered it, or except you have any other thing to all right.
All right. To a very big extent, like I think I have a very different thing to say in respect to this, because we actually will say that psychology and risk management goes in hand, and then risk management comes under psychology. You get me, right? Because I feel like, and I see it, the way I see it is that it's more like if I actually take a trade, right? Or let's say using the based off my experience, right? If I'm to take a particular trade and then it goes against me, right? And then I'm to take another re-entry, it goes against me, right? And then my psychology is like literally fucked up, right? At that particular point, I won't want to like consider what risk management is at that particular point. I'll be just looking for I'll be looking to like revenge the market, and maybe this time around like increase my risk exposure to the market, right? But in a situation whereby that I have I'm able to like bring my psychology together and let's say have everything intact, right? Have my rules written down, have my trading plan, and which is more like everything intact, right? Then my psychology automatically would align with every single thing. So I think risk management comes under psychology, and when you have your psychology in place, it will like tell you, all right, if I'm to take a loss right now, according to my risk management plan, I shouldn't like go for another re-entry, or I shouldn't like revenge the markets, right? And I should like calculate my risks. But if my psychology is literally fucked up, then automatically it's literally going to like affect my risk management parameters, because I'll be looking to like take a trade without calculating the lot size or the risk management parameters. I will be looking to like trade outside my trading hours. And
All right. In respect to risk management and psychology in trading, well, I would say they go hand in hand, because just like a car, you have the accelerator, which is adding speed, and you also have the brake, which is controlling how fast you're going. It comes down to trading as well, in the sense that when you are trading with a proper risk management and your psychology is not intact, you will notice that you will fall out of track, in the sense that you're risking the good amount of money you're supposed to risk in the market, but maybe you have a losing trade. You lose, let's say, 3 trades now, and your psychology now is not intact, you tend to at least make some certain mistakes. Just like my colleagues said, you might try increasing your lot size or trading off your risk appetite. But when your psychology is intact, you know that this is actually a business and you can actually take losses and know that, okay, this was a losing trade. I'm okay with it. And you move on and look for another setup, thereby making yourself understand that as a trader, you are also expected to have losing trades and there are losing streaks. And at the same time, you can have a winning streak and a losing streak. So it shouldn't actually affect you as a trader in the sense that maybe you're now losing, let's say, 3 trades in a row, and you're now trying to kind of go beyond your risk appetite in order to actually revenge trade the market, or you're trying to at least make up for what you've lost. So you should, at the same time, try to put everything in place in the sense that your psychology should also be intact. At the same time, your risk management should be intact as well, so that everything will flow in a good direction. All right? You feel like I've answered your question?
Yeah, but I think we are getting all mixed up with psychology and discipline and stuff. So when you talk of psychology, you talk about the effect of your trades, right? But I also know that if discipline is like involved in your trading, there will not be need for any psychological battle. Psychology is just like a big word that like covers up discipline. Because if you look at psychology and you look at discipline, you keep these two words, you see that if you are disciplined, then there's no need for psychology. Because psychology has to do with the fear of taking a loss. But if you are disciplined, then there's no need or there's no fear of taking a loss. It's just like following your plan to the T. Because don't forget, the meaning of discipline is what? Like, with a clear head, you wrote a plan, and while you're under pressure, you have to apply the ability to follow what you wrote down. That's the only way you can like stay up there for the longest of all time. Because if you say psychology is like a main thing, that means after understanding what risk is, understanding what the chart is about, you now have to talk about psychology as an element of trading, which if you have discipline as a human being, first off, like I'm saying, like if you have discipline as a human being, you're not like a trader with discipline, you're a human being with discipline, then I'm sure psychology will not be like one big trap or big traits that you'll find around your trading. To just be like, okay, I've got a plan, I'm disciplined about the plan, I have to follow it up. That's just what it is. Look at the footballers you have on online. If like Messi, let's say the time Barca had 8-2 defeats, if Messi was like all these psychological players, then he will not go on to win the World Cup. He would have like broken from that, because after that, a lot of crises came with him and trading, and his career and all that. But then, because of how disciplined this player is, he went on to follow the plan that still keeps him at the best. And then over time, you see that he has been able to achieve so much more than the defeat we had against Bayern Munich. What was that? That was COVID. So it's just an example of what discipline can do to your career. It doesn't really have to be only trading. Like discipline is a very, very big deal for us as traders, especially. So if you have discipline in check, I think psychology is just like maybe a word after all. Do you have anything to?
Yeah, in respect to this same topic, just like Tom Hugard always says, a lot of traders prepare the charts. Notice what 95% of traders are doing. They take their time to actually focus on doing their technical analysis, following up with fundamental analysis, but 95% of these traders don't actually take the time to prepare their mind in respect to the trading, because this is art of trading. You have to be mentally present. You have to be in the zone. You have to be there physically, mentally, and emotionally. You understand? Because you're trying to actually take care of few basic things of trading, which is greed and fear. And when you are disciplined as a trader, you know that, okay, this is my setup. And as a disciplined trader, you're supposed to take that setup, irrespective of the losing streak you've had. But when your psychology is messed up, or maybe you had 4 losing streaks and now your psychology is messed up, you will see that as a disciplined trader now, without actually trying to kind of get your psychology in check and trying to prepare yourself, because you're going to take another trade, you will end up not following through your discipline because of what you are psychologically, you are disciplined, but your psychology is not in check because you've not actually prepared your mind to actually be in the zone to trade as a professional trader. So you have to prepare your psychology, prepare your analysis, then your discipline. You have to keep everything in check so that you actually be able to be profitable.
Good. So I would like to ask a new question, but this is as regards to STEM psychology, but it has nothing to do with like what we just talked about. So if let's say there's a human with psychology in check and all that, I'm giving this question to my TSM boss, and then there is a robot without psychological aspects. Who do you think will come out on top? Is it the robot that follows the plan to the T? Robot that is built on discipline, that has to follow the plan, regardless of what the effect is, like a winning or a losing streak, or a trader that has the effect of a psychology, after taking a loss, he has to then reboot himself and prepare for a winning trade. Who do you think will perform better over time?
All right. So firstly, I understand where you're coming from, right? Now, in respect to the example you gave, talking about a robot, right, and then a human being, right? Now, one thing we should understand is that a robot doesn't have emotions, right? Okay, that's one thing we should understand. And when we're talking about psychology now, you get me right. You as a trader, you're a human being. You get me right. And for you to actually follow a particular discipline, then you actually need to have a good mindset towards that particular discipline. You get me right? So a robot is just more like it doesn't have it doesn't think twice. Okay, it doesn't feel whether this is good or bad. You get me right? Unlike you now, who is a human being, right? Definitely your emotions will come in check. Now, when your emotions come in check, this is where your psychology comes in. Okay, I need to follow my discipline irrespective of what happens. You get me right? So me personally, I don't feel like both of them contradict each other. I just feel like, okay, psychology, having a good psychology tops it up. That is to say, when your mindset is like good, like you understand that, okay, this is the forex market, you can take losses, for example, right? And then when you accept that, you can be like, okay, this is when I can like follow up my trading plan. That is my discipline. You get me right? But when I like have my discipline there, let's say my discipline can be like, okay, it can incorporate, don't take a trade on Monday, stuff like that, right? And then to avoid losses. But then I take a trade on Tuesday and I take a loss. What do we call that, right? But when I'm like having a good psychology, I'm like, okay, anything that can happen in the market. And even if I'm to take a loss on Tuesday, Wednesday, Thursday, I still should follow my particular plan. That is psychology. No, like that's psychology, bro. Like that is psychology. But anyway, I would like to hear what Max has to say.
Well, from my point of view, I think everything is really getting heated up here. From my point of view, I feel like as a human being, we all actually have emotions. Do you understand me? As traders, all traders actually have emotions we are constantly battling with. And what are these emotions? The fear of missing out on a trade, the fear of taking a loss, even the fear of execution, the fear of holding on to winning trades, the fear of holding on to a trade that is probably looking like it's going to attack your stop loss when it's have not actually attacked it yet. These are emotional barriers that traders faces. Then what can actually help you out of this emotional state of mind? What can help you to trade outside the space of emotions? That is you having your psychology properly fixed. Now, how can you get properly psychology fixed? When you've actually, over the years, experienced these things happening, you see yourself, okay, let's say you are in a position, you executed a position, it looks like it is having stretch to your Excel. When it has not already gotten to it, you manually close your trade. At the end of the day, that trade will probably go to your TP and you will lose out on that trade without making any dime. So over the years, you will gain experience that will fix your psychology, that will make you gain confidence in your methodology that will make you gain confidence in your analysis, gain confidence in all round. So I believe even it is your psychology that will actually make you to be able to, have a reasonable risk management and also follow it. If you don't have a properly fixed risk management, if you don't have a properly fixed psychology, trust me, you can't even follow your risk management, because you might end up seeing, let's say, about 5 losses at a go. You start freaking out. You probably start reducing your risk. But if you have a properly fixed psychology, you will understand that, well, this is the part of the game, this is the process, and losses are normal. Losses are part of the game. So it is just a normal, losses are just random in this marketplace. So all you just have to do is to get your mindset fixed. Stay focused, just like our brother said, trader Kelvin. He said something like being in the zone. You need to be in the zone. You being outside that zone, it's where you operate in the realm of fear, in the realm of greed. Do you understand? So, as a trader, you should learn how to master your psychology, master your emotions, so you can be in the zone. You need to be in the zone to be a profitable professional financial analyst. I think this is my take on this, on psychology and risk management. So,
we have come to the end of this episode. It was a wonderful set. We had ideas from Kelvin's legacy. He was able to, throw some light on little topics, and it's a nice one doing it with my bros. And we have also TSM Boss. He also threw some light on the trading side of things. He was able to tell us how the psychology and every other risk management method needs to work. So you guys listen to the gems a lot of us drop, a lot of my partners drop on here, and try to pick a lot of values. I will also lastly have by my right.
All right, guys. I believe we've all had it well heated up. We've, as professional traders, shared our different experience in the market, how we actually view, these things from our own perspective, ranging from the aspects of how we treat our capital, the type of traders we are, if we actually are the type that flips, or we do the risk management type, the conservative type, and if actually, we've as well shared how important trading psychology is, how important risk management is, and how it is best well known to operate in the market profitably.